Exercise 4-23, we're going to complete a worksheet. So let's review quickly from the chapter what a worksheet is. So here we have the completed worksheet for Smart Touch Learning, and the date that they created this is December 31st, so it's the end of the year, and they need to do their financial statements, but before they can do their financial statements, they need to update their accounts with the adjustments in the adjustments columns. So what you would do on the job is you would start a spreadsheet, you would list the account names over here, and you'd probably get these from the chart of accounts, and then for the unadjusted trial balance columns, you would look at the ledger to get the balance, the latest balance for all of your accounts. Plug them in here, and then for the adjustments, like we saw in chapter 3, we would figure out what the necessary adjustments are for the accounts to update them so that the balances are correct. And then for the adjusted trial balance, these are the corrected balances. And how do we get these? We take the unadjusted trial balance and we either add or subtract the adjustment. For example, with accounts receivable, we had $1,000 before the adjustments, and then we increased the account by $800, so our new balance is $1,800. So once we get done with the adjusted trial balance columns, we have two new columns: the income statement columns and the balance sheet columns. So the income statement columns, we're going to put the accounts that affect the income statement, which means revenues and expenses. So as you can see, we have our revenues here, and then we have all of our expenses. And then what we do is figure out what the difference is. So this revenue of $17,500 minus total expenses of $89.50. And that gives us a net income of $8,550. And then what we do for the balance sheet columns, we take the accounts that are on the balance sheet, which means assets, liabilities, and capital. We add their total debits and credits, and we find out that the difference should be the exact same amount as net income. And then from there, once the worksheet is completed, the accountant would create the income statement, statement of owner's equity, and the balance sheet. Now remember, these are just, even though they say income statement and balance sheet columns, this is not actually the income statement. This is not actually a balance sheet. So we have to do the formal reports that we've done before, and then after that, they would take these adjustments and enter these adjustments into the journal. Because remember, this worksheet, which is basically just a spreadsheet, is not the official accounting records. The official accounting records are put into the journal. So let's get this started. The unadjusted trial balance of Gordy's solution at November 30th, 2025, and additional information follows. So we have the requirements here. We can view the unadjusted trial balance here. However, it is below on this side, so we don't need that open. So the first requirement is to complete Gordy Solutions worksheet for month ended November 30th, 2025. Enter the adjustments in the adjustment columns of the worksheet. Key adjusting entries by letter, then complete the adjusted balances columns of the worksheet. Abbreviations used, accumulated depreciation, and equipment. So again, we have our worksheet below and then our additional information for our adjusting entries here. So let's start with adjustment A, accrued service revenue of $600. So for the millionth time, accrued means something is accumulated but not yet paid. So cash is not involved. So what has accumulated here? Revenue. And because it hasn't been paid, this means the customers owe us this amount, but let's record the revenue first. So revenue is increasing, and how do we increase the revenue? With a credit. So down here towards the bottom under revenue, maybe service revenue, yep. So under service revenue, we are going to be crediting transaction A for 600. And then remember, because it says accrued, it means it has not been paid yet. So we performed some service, but our customers have not paid us. So this means they owe us, and that means we need to increase our accounts receivable, which is an asset. And then assets increase with what? A debit on the left side. So we'll scroll back up to our accounts receivable. There it is. For transaction A, 400. So we are increasing our accounts receivable. Our customers owe us $600 more. Okay, so adjustment A now has a debit and a credit. So let's go ahead and move down to B. So with B, we have depreciation of $300. So we don't have to calculate the depreciation in this problem. The authors were nice to us. So now we need to plug in this $300 of depreciation. So depreciation creates depreciation expense. So how do we increase an expense? With a debit. So let's scroll down to our expenses, find our depreciation expense on equipment. And since we are increasing that expense, that is a debit on the left side. So that is going to be for $300. And then what is the other account whenever we record depreciation? It is accumulated depreciation. And how does accumulated depreciation increase? Because that's all it does as it accumulates. It increases with a credit. So I'm going to credit accumulated depreciation. We're going to scroll back up. That is hiding right here under the equipment. And that is a credit for transaction B of 300. Again, this is a contra asset, so it increases with a credit on the right side. Now for transaction C, we accrued salaries expense for $800. Again, we have that keyword of accrued, so we have not yet been paid. So salaries have accrued, they've accumulated, but have not been paid yet. So because they have not been paid, we owe this amount. So we owe salaries to our employees, which means we would need to increase the liability for the salaries payable. And then how do we increase that liability? With a credit. So I'm going to find salaries payable here, and that is going to be a credit for transaction C. So we increase that salaries by 800. So we owe $800 worth of salaries. And then we have to record salaries expense for the same amount. So that is that $800. And let's find our salaries expense towards the bottom here. That is going to be for transaction C, our debit, because again, expenses increase on the left-hand side with a debit. And then we have prepaid rent expired of $500. In other words, it has used up. So we find the prepaid rent. Now this is key. We have, in the prepaid rent, we had $1,900 worth of prepaid rent before this, but it says that $500 of it has expired, so we need to lower the prepaid rent by $500. And then how do we lower an asset? With a credit. So I'm going to credit our prepaid rent here for transaction D to lower it by $500. And then we also need to increase the expense for rent. And how do we increase an expense? With a debit. So I'm going to debit rent expense. When we find it right here, rent expense, portion D, increasing that rent expense by $500. And now we have our last adjustment, supplies used for $100 for adjustment E. So this is the really critical part. You have to pay attention to this word used. So it is not the new balance. This is telling us how much was used. So we need to lower the office supplies accounts by 100. So let's go ahead and go up to our supplies. So we're going to need to credit it for transaction E because we are lowering our supplies by 100. So again, we are crediting supplies for 100 because to lower an asset, we need to credit it. So then we also need to increase the expense account that shows that we use these supplies, and that's going to be another $100 adjustment to the supplies expense, a debit. So I'll put E, supplies expense of 100, and again we are debiting that because in order to increase an expense we need to debit it. So now we need to make sure we have a debit and a credit for each of these adjustments, and it looks good on this end. We'll go ahead and add these through now. So let's start with our debits. So to start we have 600, and then we're going to add the rest of our debits. So we have plus 300, plus 800, plus 500, plus 100, gives us a total debit balance of 2,300. And then we're going to clear our calculator and do the same for the credits. We're going to add those up. So let's get those going. So we have 500 plus 100 plus 300 and plus 800 plus 600. That gives us 2,300. Yay! So our debits equal our credits, which is great. And then we also have each of our adjustments labeled. So in case we needed to ever come back and troubleshoot, we have those there. And so let's go ahead and check our answer. Excellent. Okay. So now we don't need our adjustment data from the additional information table open anymore. Don't need this one, the unadjusted trial balance, open either. However, it is helpful to use as a tool. So I have it squeezed down in order to check which row you are on as we are completing the table here. So for the first part here, we have cash. So from the unadjusted trial balance, we had a debit of 4,000 and no adjustments, so that balance stays the same. And then we have accounts receivable next. So we had a debit balance of 3,200, and then we had $600 of revenue we needed to accrue. So that adds 600 to the 3,200, giving us a new debit balance of 3,800. Then after that, we have our prepaid rent. So previously we had a balance of 1,900. However, we used up $500 worth of that rent. So that means our new balance is going to be a debit of 1,400. And why is that? Because our balance was 1,900 before as a debit, and then we needed to lower our prepaid rent by 500. So that leaves a balance in the debit column of 1,400. Since we are working on assets still. So let's see what's next. We have supplies, another asset. So we had a previous balance of 3,000. We credited $100. So that means our supplies are being lowered by 100 to 2,900 as a debit balance, because again we used up $100 worth of supplies. Okay. And then we have equipment. We did not do anything to our equipment. So our debit there is 34,800. And then next up we have our accumulated depreciation on equipment. I'm going to scroll on down so we can see that. So previously we had a credit balance of 1,600. And again, why is that? Our accumulated depreciation is a contra asset. So the balance sits in the credit side, on the credit side. So then we added an additional $300 worth of depreciation, so to accumulate there, and that is going to be a credit balance of 1,900. And again, why is it sitting in the credit side? Because it is a contra asset, so that balance will be sitting on the plus side, the credit side. And then moving forward, we have accounts payable. Okay, we are into the liabilities now. So for accounts payable, we didn't touch it, so our credit balance will be 5,400 as before. And then salaries payable, our next liability. Looks like we did not have anything sitting in the credit side before, but now we have $800 worth of salaries that we have to pay. That is our debt there sitting in the payable. All right, and now into the equity accounts. So we have the King Capital. We did not touch that. That sits as a credit balance. Withdrawals, that is a regular debit balance. We did not touch the withdrawals. And then the service revenue, so that's our next one we did do something to. So we made $600 worth of revenue. So we have to add that into our credit side. So that gives us a total of $9,200 as a credit balance. And then we have our depreciation expense on equipment. Ooh, the expenses. Okay, so we switch back again. So the expenses have a regular debit balance. So with this one here, let's take a look. So depreciation expense on equipment, we have a balance of 300. Didn't have anything in there before. Salaries expense, we had a balance of 1,700 and added another $800 worth of expense, gives us a total of 2,500 for our salaries expense. Rent expense, nothing previously. However, we did add $500 worth of rent expense. Utilities expense, we did have some before, did not add any, so that balance stays the same. And then our supplies expense, none before. However, we added $100 worth. Now, what I recommend you do before moving forward and checking your answer is to double check that your balances are on the correct side. So here are your assets down through the equipment. Then we have our contra asset of accumulated depreciation, which sits on the credit side, along with the liabilities that also have a regular balance on the credit side. And then we have our capital accounts, and then we have our equity accounts. So again, capital has a regular balance on the credit side. However, withdrawals are a contra revenue, so that is a debit balance. And back to revenues, a credit balance, and then the expenses, which sit as a debit balance. Now, in essence of time, I'm going to go ahead and add these up for us. So this is 53,000 for the debit column and 53,000 for the credit column. If we've done everything correctly here, this should end up being correct. Well done. So now we are on to the next part of requirement 1, referring to the adjusted trial balance columns you prepared above. Those are hiding up here. Complete the worksheet by populating the income statement and balance sheet columns. So now if you are working on the homework, you can click here to review the worksheet up above. However, if we're on the test, you will need to scroll back up manually and look and see what we have here in the adjusted trial balance. And that's only because it would give you the solution. So then you're going to have to scroll back up to get your balances. So again, let's review what we're doing for the trial for the income statement columns. So we've just completed the adjusted trial balance. So now we need to finish or complete the income statement columns. So what goes on that income statement? Hopefully you have this memorized by now. It is revenues and expenses. And then you subtract the expenses from the revenue to get your net income or loss. So what we need to do is go back up and find our revenues and expenses towards the bottom of our worksheet. And just right here, we will find our revenues. So that is first here. So we have service revenue, a $9,200 credit balance. So we can go ahead and put that in here. So service revenue, $9,200 credit. And then back up in our table, right below the revenue, we have our expenses. So we have 1, 2, 3, 4, 5 expenses here, all sitting on the debit side. So the first one is our depreciation expense on equipment for 300. So that is here. So a debit for 300. Make sure you are getting it from the adjusted trial balance on the right side. So then we have salaries expense of 2,500, rent expense of 500. And we have 2 more to go, utilities expense and supplies expense. So utilities expense was 600, supplies expense for 100. 600, 100. Now, should our revenues and expenses balance? No, it's going to be very rare that your revenues are going to equal your expenses exactly. That would be break even, and that almost never happens. Again, it could happen, but very unlikely. So now getting back to our example that we're working with, notice there is a line here, so that means below we're going to be doing some sort of mathematical operation, which means in this case we're adding up all of the expenses and then adding up all of the revenues. So the revenue is the easy part. We only had one for 9,200. And then we have our expenses. So that is that 300 plus 2,500 plus 500 plus 600 plus 100 gives us a total of $4,000 worth of expenses. So now do these balance? No. So what we're going to do is we're going to calculate either the net income or the net loss and put it on the smaller side, because the goal with this worksheet is to get both sets of columns to balance. So what is that 9,200 minus 4,000? That gives us a net income of 5,200. So that will go here. And again, why am I putting this on the smaller side? It's because we want this 4,000 plus 5,200 to equal 9,200, so both sides balance. So we're going to have 9,200 here and 9,200 here. So our debits and our credits balance at the end. So our goal at the very end here is to get both sets of columns to balance. So nice, this company has a net income of 5,200. So don't forget your financial statement formulas. Revenues minus expenses equals net income, and our two sets of columns balance. So that is good. And we will check our answer. Excellent. Okay. So now when we scroll back up here so we can see everything, they want us to figure out our balance sheet accounts. Figure out, well, what goes on the balance sheet columns. So the formula for your balance sheet is assets equals liabilities plus ending capital, also known as equity. So we're going to move over all of the assets and contra assets, liabilities and capital and draws. So we'll move all of those to these balance sheet columns. So again, make sure you're getting this from the adjusted trial balance columns at the end. So we can start, first of all, we have cash of 4,000. Then we have accounts receivable of 3,800. So we'll bring those down. And for time's sake, I'm going to bring these over from my scratch paper here. You are welcome to have one as well. Okay, so we have our assets done. Then we have our contra asset, this accumulated depreciation balance, 1,900. Liabilities, keep going here. So that is 5,400, 800. So liabilities are done there. Then we have the capital account, which has a balance of 800, a balance of 35,700, and then we have our withdrawals, which again sit on the debit side for 2,100. And then we are back to our revenues and expenses, which again belong on the income statement. So just a quick review, revenues and expenses go on the income statement columns, and all other accounts on the worksheet go on the balance sheet columns. So then with this horizontal line here, they are asking us to total these up. So with the essence of time in mind, I'm just going to add these through here. So we have 49,000 for the debit side for the balance sheet columns. And then we have a credit side of 43,800. And no, these should not balance here. And then we're going to see what that difference between these two amounts is. And it is again 5,200, which was our net income. And it should be the same amount as net income, because when we want these columns to balance, we want to put the 5,200 on the smaller side. because we want our totals here to balance, is going to be a debit balance of 49,000 and a credit balance of 49,000 on this side. So one thing that confuses students a lot is which side does the net income fall on here. So one reason or one way to remember is to remember that both of these balances at the end should equal each other. And the only way to get this balance to equal is to add in either net income or loss on the smaller side. Since this is net income, how do we know that this is net income? Because revenues are larger than expenses in this case. So this is a net income, not a net loss. And then a way to remember which side it goes on over here on the balance sheet set of columns is there's two ways. One, you need to put it on the smaller side so that both columns balance. And the other way is to remember which side net income goes on. The other way to remember which side net income goes on is how does net income affect capital? Net income increases capital. And then how do we increase capital? We credit it. So that's another way to remember which side this net income goes on, because it increases capital. So you're going to put it on the same side that increases capital. So let's go ahead and check our answer. Good job. Okay, so now for requirement 2, how much was net income for November? Well, we already calculated that up here, so that is that 5,200. Because again, revenues were higher than expenses, so that is a income. So let's go ahead and check our answer. Fantastic, and we are done.